Hello, everyone, and welcome to this episode of our Seven Investing podcast. I'm Seven Investing founder and CEO, Simon Erickson. And if you've been following the news lately, you've seen quite a bit of headlines about Bitcoin. It's now pushing $40,000 per Bitcoin, and there's a lot of attention on this asset class. But what does this really mean? What are the fundamentals behind Bitcoin? And is this a viable long-term investment strategy? We think that it is at Seven Investing. And we recently signed a partnership, long-term partnership with CryptoEQ to help all investors make more sense of what's going on in cryptocurrency. We simply don't want anyone to be in the dark where they don't know what's going on with Bitcoin or how it can impact stocks in the market. And so I'm really excited this morning to be joined by Spencer Randall. Spence is the co-founder and CEO of CryptoEQ. He has a very informed and thorough opinion about what's going on in cryptocurrencies. Spence, thanks for joining me here on the Seven Investing podcast this morning.
Thank you for having me on, Simon. It's a pleasure to be here.
We're going to touch on a lot of topics here, Spence, because I want to pick your brain about what is pushing Bitcoin's price higher in the retail markets, what's going on with cryptocurrencies in the enterprise markets, and how investors can get access to this through institutional new products. But let's start at the 10,000 foot level first on this. We had you on the live stream yesterday. So one question that I'd like to ask you again would be, can you describe CryptoEQ, which is the company that you created, and what are your goals that you hope to accomplish?
Yeah, thank you, Simon. At CryptoEQ, we're helping simplify investing, trading, and learning about crypto. So when I think back to when I started to wrap my head around Bitcoin, and it took several months. This was back early 2017. It was a very complex space, very complex technology, and I'd say that still holds true today. So there needs to be a lighthouse, a trusted brand, really a morning star of crypto to help shepherd millions and millions of people into this new asset class. And that's what the team at CryptoEQ is working hard every single day to do for the Seven Investing audience and the global community of investing and trading.
There is so much speculation around cryptocurrencies right now. You have developed a framework to actually evaluate what they're worth. Can you tell me about the methodical approach you're taking to valuing cryptocurrencies?
Yeah, another great question. We get this one a lot, right? What's the fundamental value of something like Bitcoin? There's so many different crypto assets, there's thousands. So very early on, we immediately saw the value in being systematic about the way you think about cryptos. There's so many different use cases, types, networks. There's so many factors to consider. So we've developed a 10-point framework. We call it our core rating framework. And in that framework, we cover everything from the founding team of the project to the governance model of the project to the token economics. We even get into regulatory concerns, potential regulatory concerns around the project. So a 10-point framework that every single crypto asset that we take a look at cryptoeq.io, you can trust that it's ran through that framework so that you have some kind of standard, some kind of North Star to help guide you as you're learning about this asset class.
And can you walk me through what differentiates cryptocurrencies from one another? I mean, there are thousands of cryptocurrencies that are tradable out there, just like there are thousands of stocks that are tradable out there. We look at fundamentals where we're comparing things like price to earnings or price to sales, but it's a whole different ballgame in cryptocurrencies, right? These are not all interchangeable with one another.
Yeah, although some of the principles apply that you would use in equity investing, you really do need a new playbook when you start thinking about cryptocurrencies. And so we've written that playbook, and you ask, what kind of differentiates the value? We literally consider hundreds of factors when we do these core ratings and this 10-point framework. But I would say one fundamental thing that's different when you talk about Bitcoin, when you talk about Ethereum, these are distinct, separate networks, completely separate communities of developers. And when you think about just one blockchain, like a Bitcoin or another blockchain like an Ethereum, it's a little bit different than equities where you have your tickers and you have your brokers. These are entirely different infrastructures, right? Bitcoin its strongest narrative right now is digital gold. Ethereum could potentially be the evolution of the internet. So when we think about each infrastructure that is Bitcoin or Ethereum or other crypto assets, there needs to be a lot of nuance. You need to consider the use case. Ethereum and Bitcoin have very different missions, although for the average trader investor, they're the blue chips of crypto. And so as you get more into the weeds, you have to consider the use case and all the nuance around each crypto asset.
It's a great thing to keep in mind that these are platforms, networks, currencies that are being built upon. They're not just short-term trading. People shouldn't be thinking about this in isolation of what's the price of Bitcoin. It should be thinking more in terms of what is Bitcoin enabling out there for people or for companies to do.
Agreed. A good analog would be Tesla. So for equity investors thinking about Tesla, if you write Tesla off as simply a car company, you're probably missing the big picture. Tesla is much, I would argue Tesla is as much an energy company as it is a car company. And so if you're just learning about Bitcoin or really opening your eyes to Bitcoin and Ethereum, if you're kind of on zero and it's your first step, I encourage you to think about the infrastructure and communities developed around these crypto assets and how category shifting and redefining they really can be, right? Tesla is so much more than cars, right? It could potentially change energy consumption on a global scale. So when you think about Bitcoin, you think about the possibilities, or Ethereum and the possibilities. These are disruptive technologies. And so I encourage people to take a deeper look past the price action. Let's start thinking about the fundamentals of these crypto assets.
So let's look at both of those for our podcast here today, Spence. Let's look at the price action first, and then longer term, what's taking shape from these. But I've got to ask you, I mean, we've seen the price of Bitcoin just soaring these last 12 months. It's up 300% and is now pushing, I believe, $40,000 per Bitcoin, depending on the day that you check that. Is this a short-term bubble, as I've seen it referred to out there, or are there fundamental drivers that are unappreciated by people that are looking at this maybe a little too short-term?
Yeah, it's another great question. We've gotten that one a lot. Is this a bubble? No, I would say it's not a bubble. One of the things I like to invoke here is the stock to flow model. This is a fundamental model that's used to evaluate the price of things like gold, silver, and platinum, so other commodities. So when you think about Bitcoin specifically in its stock to flow model, we're looking at the issuance of new Bitcoin through Bitcoin mining, and we're looking at the stock or the total available supply of Bitcoin on the market. And so when you chart that against price, right, we would actually at $40,000 Bitcoin be ahead of schedule, right? So this pullback that we had kept us right on track. The stock to flow model has us at about $30,000 is the fair market price of Bitcoin for the month of January, bumping up to about $40,000 mid-February. So, I think this correction that we just had of about 25%, you mentioned that the volatility of the upside too, 300% in a year, that brought us right back down to kind of the mean that we would expect for the price of Bitcoin as it is today on the stock to flow model.
And that's a relationship then, Spence, between the available supply of Bitcoin that has been mined out there versus how often it is being used and the adoption that you're seeing. Is that a fair way to recap?
Yeah, so you think about stock to flow as what's available on the market today, charted against what is being issued by the network. So unlike gold, silver, and platinum, Bitcoin is issued based on an algorithm. There's consensus. It's a predictable, very predictable schedule. It's like clockwork, right? So we know exactly how much Bitcoin will be issued every single day, every single year. It's programmed. And so when you know those factors, those are known, and you chart price, this kind of 10,000 foot view of Bitcoin fundamentals as it pertains to price in my opinion, is the best way to think about these broader cycles.
Spence, I have to take a second to tell a story that I bought my first Bitcoin at $248 and wrote it up to a price that I was able to sell it for a hot tub and a self-playing piano. And I felt like a genius here at home when I did that. But I'll tell you, man, now that I see it going even higher, I'm starting to feel less like a genius as this continues to march steadily higher. But it sounds like you've got a long-term plan and some quantitative way to track what is expected versus what you're actually seeing out there.
Yeah, there's a lot of stories like that. So I'm in it. What I like to sprinkle in here with folks when they talk about selling tops or exiting, if you match your principal investment with a considerable amount of your time doing research, or you match it with high quality tools like 7investing.com or cryptoeq.io, I think that investment of time gives you the confidence to hold through any volatility or hold in the long term. I think if I were to calculate how much time I've spent researching Bitcoin, Ethereum, and things like it, it probably, if I put a value, hourly rate on my time, the value probably matches my holdings. I've been in this space for years and years. And so that's where, the strong hands, I think, are born, right? When you look at this 25% move down that we had recently, a lot of people that have watched, several market cycles in crypto, been here through 2013, 14, this is a dampened move to the downside, right? We have folks that have, witnessed 40%, 50% corrections when the market was smaller. So, I think as the crypto market continues to expand and we're looking at a potential $1 trillion asset in Bitcoin, volatility will continue to be dampened.
So knowing that there is a lot of volatility in this, how do you think about investing in cryptocurrencies if you also have other assets in stocks or elsewhere? Is this something that you take a 5-10% stake? You say, hey, I'm willing to put this in a more volatile, higher risk investment?
Simon, to be candid, that's how I got started. 5 to 10% of my investable assets allocated to alternative investments. At the time, alternative investments for me were bullion and cryptocurrency. So I think 5 to 10% is a great starting point. And then, as the market expands, likely you will need to rebalance. Is you can see rapid appreciation, especially with the cryptocurrencies. And you're still it's a nice hedge, right? If a lot of your investable assets are real estate and equities and bonds, which are all tightly pegged to the dollar, it behooves you to have a few hedges, right? Bullion, cryptocurrencies that are blue chip cryptos, things that can move at weak correlations, maybe even uncorrelated to our stocks, bonds, and real estate.
Makes sense, Spence. And, as COVID starts phasing out here and we're able to have social gatherings again, I can't wait to see you become the Bitcoin guy at cocktail parties as we start having those too. Let's shift gears, man. Let's go to the enterprise piece of this too, because we mentioned kind of Tesla as a car company, versus a energy company and all the other things it can become. We've started to see enterprises adopting blockchains and buying Bitcoin for their own purposes. One of the most recent has been, we've seen MicroStrategy putting it on their corporate treasuries. They're moving things from cash to Bitcoin, and that has unlocked a lot of value for equity investors based on those decisions. How do you see the relationship between cryptocurrencies and equities? Is there a relationship between the companies who are the innovators in this and the benefits that they are appreciating from it from a commercial perspective?
Yeah, I think the themes that are developing are, as crypto continues to prove that it's here to stay, there'll be more and more overlap. When you look at MicroStrategy, for example, or Square, in their decision to allocate some of their cash reserves in their treasury to Bitcoin, I think it's fundamentally the same thing we talked about for retail investors and traders, a hedge, right? They're looking to protect their balance sheet, just like a retail investor and trader is looking to protect their holdings, their viability, their quality of life. So I think of MicroStrategy's move, Square's move, to allocate some of their balance sheet to Bitcoin as a means to protect their organization for the decade to come.
And then how about just kind of the tangential effects too? I mean, we saw a bump for Nvidia and AMD when mining was super popular. Everyone was buying GPUs to mine cryptocurrencies like Bitcoin. Do you see anything like that that investors should be paying more attention to right now?
Yeah, so graphics cards are still a part of the mining ecosystem, right? So we could see that trend come back around. There's still proof of work chains. That's the term that we use in the cryptocurrency industry to say it's a proof of work mining consensus and algorithm. So graphics cards and companies that produce graphics cards could see another wave of exuberance as people start to regain interest or expand mining operations that are graphics cards based. We could also see MicroStrategy and Square be the first of many, right? How many other corporate treasuries may make that decision to allocate a considerable amount of their cash reserves to something like Bitcoin? So how many different organizations would it take before we see institutions holding, up to 25% of the available Bitcoin? Right? It's something that's entirely possible in the years to come.
So Spence, to put a sports analogy on this, since we are both from Texas, we've got a baseball game here. The first inning is the first time anyone's ever heard of using cryptocurrencies for commercial applications. This is Michael Saylor's out there being in the Wild West by himself, doing something no one else has even heard of. And then the ninth inning, the bottom of the ninth, is going to be everybody is using this across corporate America. Where are we in corporate adoption of cryptocurrency in the baseball analogy?
Yeah, we touched on this a bit in the live stream. I feel like for institutions, this is like the second inning. I feel like it's just getting started. For retail, I think that we've seen a lot of exuberance in retail as of late. But for institutions, they're much more methodical. They have much more complex decision-making processes, right? I mean, you've got a board that you've got to talk to. You can't just MicroStrategy. They developed this position over 6 months. This wasn't, Saylor didn't wake up and buy on Monday, right? So I think that we've had a lot of organizations start that 6-month process, and that we'll see more and more headlines come out. I mean, Mass Mutual, for example, $100 million allocated to Bitcoin. Right? So we've seen a dozen organizations now make 100 million to $1 billion plus allocations to Bitcoin. How many more are going to follow, right? Are we going to see a herd of institutions? It's quite possible.
And how about blockchains too? Are we starting to see some of that? Maybe to step back, one of the big use cases for Ethereum has been smart contracts, right? Where you're cutting out the middleman when you're working directly with customers, or you've gotten on a schedule where you don't want to start giving up 300 basis points for moving money around. Are we starting to see smart contracts and Ethereum, or even just blockchains in general, take hold at institutions that aren't using it for a corporate treasury like we talked about from MicroStrategy, but in the actual operations of the business itself?
Yeah, another great question, Simon. With Ethereum, for example, you're seeing Ethereum as the base layer of decentralized finance. So financial services and ecosystems that do not require a third party, more so you just trust in the Ethereum network. And it's so popular and it's gained so much adoption that Ethereum's seen an increase in network fees. So Ethereum is working very hard, and the development team is working very hard to help catch up with that demand. This is kind of similar in 17 when the exuberance around Bitcoin was so high that the network fees to use Bitcoin increased dramatically. And so when demand outpaces the infrastructure that's been built, the infrastructure has to catch up. So largely the developer teams of Bitcoin and Ethereum respectively are working very hard to catch up to all of this demand and make sure that those network fees are able to consistently be lower than traditional competitors.
So that's interesting too, Spence, is, we spend a lot of time as equity investors talking about network effects, right? Facebook is attracting more users, which is attracting more advertisers. You've got a virtuous cycle taking shape. Is that the same with cryptocurrencies, where we're going to see Bitcoin and Ethereum be the go-to that take the lion's share of the volume out there? Or are some of these smaller cryptocurrencies that are more specialized and flexible in what they can do, is that going to be a larger opportunity because so much of this might be a case-by-case basis?
Yeah, I'd say it depends on use case. I would say that Bitcoin has closed the door on the store of value use case, and it's achieved escape velocity. You don't see institutions talking about $100 million, upwards of $1 billion allocations to any other crypto asset. Is that going to, be the case for 10 years to come? That's a question mark. But in the shorter term, kind of 1 to 3 year time horizon, I think Bitcoin is the market leader in store of value for digital assets. And its market share fluctuating from 60 to 70% of the entire crypto ecosystem certainly validates that. With the use case of Ethereum and general smart contracts platforms, I think that there's still an opportunity for other projects to capture some of their market share. They're certainly the market leader. They certainly have the most network effects around their platform. A lot of institutions, educational facilities, Rice, for example, they already have programs built around Ethereum, in helping educate people in Solidity. So the language that you use to develop on Ethereum, deeply entrenched network effects in educating people around general smart contracts platforms in Ethereum. So that's going to be more challenging to overcome, but the door is certainly open in the general smart contracts use case, and we're monitoring, and we've rated a number of competitors to Ethereum, for example.
Sure. And talking about institutions, let's talk about the investing and financial services side of this too, right? I mean, are we seeing headway with Bitcoin? Okay, so let me step back first. We saw Kraken just apply for a bank charter. This is a cryptocurrency brokerage. It's now wanting to get embedded with financial institutions. So I mean, like, this would be something where Bitcoin could be an option with an ETF that you could buy. Or maybe you could, rather than having a money market account in your bank account, specify you want it to be in Bitcoin. Or if you've got an online stock brokerage, a way that you can directly buy cryptocurrencies. I mean, how are we starting to see this catch on with investing institutions out there, Spence? Is this something that's still years out, or are we seeing that today already?
Yeah, I mean, when we think about, like, we go back to 2020, we're like, what were like the top 3 headlines? The PayPal news was huge. So you could actually buy some of the largest cryptos through PayPal. You had some of the thought leaders like Paul Tudor Jones. He was one of the first in traditional investing come out and say that Bitcoin would be the fastest horse. And then you had, more largely the themes around the pandemic accelerating virtual adoption in all kinds of different aspects. So flight out of cash and into virtual currencies made a lot more sense to people. So I think those 3 things coming together kind of developed a perfect storm for Bitcoin to be ahead of schedule in terms of its adoption and price action. But when I think about like Kraken's news, right, and their financial charter to become a bank, regulatory clarity is developing. I wouldn't say that we have it, but it's developing. And for things like stable coins, we're getting more clarity around stable coins. So I think that transacting on a ledger, a cryptographic ledger, either through a stable coin, a Bitcoin, an Ethereum, will be more increasingly easier to do through your traditional platforms that you're accustomed to. You can buy Bitcoin on PayPal. How long is it until your bank that you personally use, everyone out there, decides to integrate one or more cryptocurrencies into their system, where you could store a balance, in a stable coin or Bitcoin that's federally insured, right? I think that we're a few years out for a lot of these smaller banks, but for the larger banks, they'll be the first mover, right? For example, I've seen partnerships between USAA and Coinbase, right? Where your Coinbase wallet's integrated into your online bank, right? So how many more things are we going to see like that, where you can you can integrate your crypto exchange, whether it's Kraken, Coinbase, Gemini, into your traditional banking interface.
So a couple more final questions, some fun ones here for you, Spence. You just mentioned the first one of them, which is Coinbase. And so my first fun question is, we've seen Coinbase is coming public, right? People are pegging this at a 25 to $30 billion valuation. A lot of people are already screaming about how overvalued that might be. Are you bullish on Coinbase going public as a stock market investment?
I'm bullish on Coinbase in general. Anecdotally, all the people that I talk to about next steps in crypto, they're always on the Coinbase app. They've got deeply entrenched network effects here in the U.S. It is just in my experience talking to people about crypto that are new to the space, it's the default, it's the go-to, it's the household name. So I think a lot of that is you could chalk up to their ease of use. They do have good UI UX, great UI UX. And their network effects around their platform in the US are incredible. So yes, I'm certainly bullish on Coinbase long term. Yeah.
Okay, let me continue the lightning round. Bullish on Coinbase long term. Next lightning round question for you is, does Elon Musk publicly admit to taking a stake, either personally or with Tesla as a company, in Bitcoin in 2021?
Yes. Yeah, I think that, of course, I've never met Elon, but I follow some of his content. I've watched many of his interviews. I think that the Bitcoin community and Elon are in the same orbit, right? And they both spend a lot of time on Twitter. So I think it's only a matter of time before Elon decides to either allocate some of their cash reserves at Tesla to Bitcoin, or integrate cryptocurrency payments into some aspect of what they do. I'd say I think in 2021 that would be a yes.
And other than Tesla, what's another large company, blue chip stock that's well known out there that also integrates cryptocurrencies into some aspect of what they do in 2021? Who's the innovator that's a large company willing to take a stand on this?
Yeah, I'd say Square. They kind of got overshadowed by the MicroStrategy news, but they made a considerable allocation. I believe their first allocation was 50 million of their corporate treasury to Bitcoin. And Jack Dorsey, the CEO of Twitter, has been a long time crypto bull. So I would expect to see more positive developments around the Twitter platform and Bitcoin and crypto, potentially even maybe integrating some payments there through Square. Maybe seeing Square and Twitter have some kind of overlapping functionality. That would make a lot of sense to me.
We've seen Minute Maid Park. We've seen Mercedes-Benz Superdome. In what year is the first Bitcoin-sponsored sports arena going to pop up into the public eye?
That's the trick, because it's a completely decentralized network. Bitcoin is not. You're not going to see someone that's the CEO of Bitcoin facilitate that partnership, right? The Bitcoin arena. I don't know. I can't see it. I can't see it. You could see I could see a MicroStrategy arena with the Bitcoin logo on it.
There we go. That would be an interesting one. And thank you for the methodical answer to my completely ridiculous question, Spence. my final one for you is, where in the world, what country does Satoshi Nakamoto actually live in?
He, she, or they could be anywhere in the world. It's a brilliant team of people that built this decentralized network that we know as Bitcoin, and they're brilliant to have created it, and also brilliant at staying completely anonymous. So that I think that if you have the intelligence to build this thing and have the architecture, you also know how. If you want to stay anonymous, you likely could. And that's what they've done.
Well, once again, Spencer Randall is the co-founder and CEO of CryptoEQ, also a partner of ours here at Seven Investing. We just announced yesterday the beginning of a long-term partnership. I really think that his company is doing some incredibly thorough, fantastic research, not just for people who are interested in directly buying cryptocurrencies like Bitcoins, but also realizing what the impacts of cryptocurrencies will have on other companies and businesses and how that'll impact us as stock market investors. Spence, thanks very much for the time here with Seven Investing in our podcast today.
Thanks for having us on again, Simon. We look forward to continuing to work and grow with you in 2021.
Thanks very much. And again, CryptoEQ.io is Spencer and his team's website. Go check them out if you want to learn more about cryptocurrencies. And thanks for tuning into our podcast here today. We are Seven Investing, and we're here to empower you to invest in your future.